Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about 160 Health International Limited latest report. 160 Health International Limited offers a wide range of businesses and services that cater to various needs in the pharmaceutical and healthcare industry. At its core, the company provides wholesale and retail distribution of pharmaceutical and healthcare products in China. In addition to product distribution, 160 Health International has developed the Healthcare 160 platform, an online platform that offers digital healthcare and wellness solutions. This platform caters to different segments, including business customers, medical institutions, professionals, individual users, and third-party merchants. The services provided through this platform include online marketing solutions, digital hospital solutions, and online healthcare services. The company's comprehensive approach to the healthcare industry makes it a one-stop shop for various needs, from product distribution to digital healthcare solutions. 160 Health International Limited market capitalization of $34 billion is significantly larger than the average industry peer of roughly $1 billion. This shows that 160 Health International Limited holds a significant advantage in their industry. 160 Health International Limited trades at a lower price-to-book ratio of -200 and 85.79 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company exhibits a very high leverage profile, with liabilities accounting for 130% of total assets. This elevated debt level warrants heightened caution, as it may limit the company's financial flexibility and increase risk during economic stress. We have to further examine the industry and the nature of the business to determine if they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth for a company can be identified through various indicators. In this case, 2 key areas have contributed to significant increases in revenue. Digital healthcare and wellness solutions have been a major driver of revenue growth, with a year-on-year increase of 5% on page 3 and an even higher growth rate of plus 7.6% from 2024 to 2025, as mentioned on pages 20 and 21. This is further supported by the substantial increase in revenue recognized in relation to contract liabilities, which rose from $41,446,000 in 2024 to $55,580,000 in 2025. Another significant contributor to revenue growth has been the sale of pharmaceutical and healthcare products, with a year-on-year increase of 3.9% on page 3 and an additional plus 3.7% growth rate from 2024 to 2025, as mentioned on page 20. These figures indicate that both digital healthcare solutions and pharmaceutical products have played important roles in driving revenue growth for the company. The net income and profit margins of the company underwent a positive change between 2024 and 2025. The gross profit saw an increase of RMB 10 million, rising from RMB 160.2 million in 2024 to RMB 170.2 million in 2025. This growth was accompanied by an improvement in the gross profit margin, which rose by 0.3% from 25.8% in 2024 to 26.1% in 2025. The company's financial performance indicates a positive trend in its operating cash flow. According to the provided information, the company generated positive operating cash flow in 2025. This is supported by the net increase in cash and cash equivalents of $340,540, which suggests that the company has sufficient funds to meet its operational needs. However, it's worth noting that the company did experience a negative net cash used in operating activities of $114,438. But this deficit was offset by the significant increase in cash and cash equivalents. As a result, the overall picture is one of positive operating cash flow, indicating that the company has sufficient liquidity to cover its operational expenses. The company's financial situation has undergone significant changes in terms of its debt level and interest expenses. In terms of debt level, a substantial increase was observed. Non-current borrowings rose by 125% from RMB 1,277 million to RMB 2,910 million, while current borrowings surged by 167% from RMB 89,393 million to RMB 238,110 million. However, the gearing ratio, which measures a company's debt-to-equity ratio, decreased from 129.7% to 69.2%. This indicates that despite the increase in debt level, the company has managed to reduce its reliance on debt. The interest expenses have also seen an increase of approximately RMB 3.4 million, representing a 23.9% rise. The company's performance in various segments has been noteworthy, with two regions standing out as particularly successful. The Digital Healthcare and Wellness Solutions segment saw a notable 5% year-on-year increase, indicating strong growth in this area. Similarly, the sale of pharmaceutical and healthcare products also experienced a significant boost, with a 3.9% year-on-year increase. These results suggest that the company's focus on healthcare-related services is paying off, contributing to its overall success. Management is optimistic about the company's outlook and strategy. They plan to build on their existing platform to create more efficient solutions for medical institutions, which will enable sustainable growth and expansion into new international markets. The integration of AI diagnosis and treatment solutions with offline medical services is also a key focus area. The company aims to accelerate its nationwide expansion of public hospital operational models and advance the implementation of AI technology in various segments of medical services. This strategic approach is expected to improve the outlook, with reduced losses projected for 2025 compared to 2024. Management believes that adjusted net profit/loss provides valuable information to investors. In terms of financial management, the company is confident in its ability to satisfy liquidity requirements through a combination of cash generated from operating activities, external borrowings, and capital markets. This robust financial foundation will enable the company to execute its strategic plans effectively. That concludes the financial summary for 160 Health International Limited. Feel free to comment below, and I will be happy to answer them when possible.